They were back live. Video cut out. I don't know why it said there's something about connection. So back on. So we was monitoring Great British Pound USD, and we had a thesis that yesterday's daily high is up. We had a thesis that yesterday's daily high is up here. Throughout the evening, price rallied. Well, not really rallied. Price traded back up into that area, but never took out that area. Just traded up to a few pips below, and then from that time, from 12:30, all through the Asian session up to this AM, coming to the start of the European session, price just trended downwards. We already took out the low that was made. It was a low made, and we've taken out this resting liquidity here from yesterday evening. Greenwich Mean Time. And then once we've done that, we've actually bounced off this 15-minute fair value gap, which I marked out after the fact, which I noticed after. And then price is going back higher. So price has not come back again to retest the lows. It kept on going up, found support, kept on going up. So it's showing us that it's making higher highs on the short term, on the short term. On the short term, on the short term time frame, basically in 1 minute. Yeah, obviously it's bullish as well overall. Even on the 15-minute, we can go to the hourly. It's price being gradually grinding higher. Obviously, because of all the instability with the US dollar, with Trump tariffs and the bad economic data that came out, all them things have been weighing in on the dollar. That's why Great British Pound and other currency pairs have been, well, I ain't even looked at the other currency pairs, but I'm assuming that across the board, Great USD has been losing ground, yeah? So anyway, if we're making higher highs, we've got this high up here, innit? This high that wasn't taken out. Yesterday's high wasn't taken out. So we've got this double top, even like a triple top here. Yeah, when market came back up, it never took out the high, came back up again, never took out the high, sold off, made new lows, we're making higher highs. So we're now actually probably closer. Well, we're about midway. Probably about midway, yeah. So we're about 50% of the range at the moment. So as it's making higher highs on this 1 minute short-term time frame, we're going to be looking for a long entry to trade it up into that 126.78 area where we have that high of the day where a lot of the liquidity has been sitting resting since yesterday. Now, obviously, this is all based on what the market does. Yeah, it's just a loose, it's just framing the long. Like if the market had retraced and came down and taken out the lows, that could have been framing the highs, and rejected, that could have been framing going long from there. If it came down to the lows, broke through, showed momentum going down, we'd be looking for a retracement, a retest to see if the market would fail at the retest to go short. Yeah, so it's just framing the long and the short based on the range, and then looking at what the market is doing and looking for an entry based on that. Yeah, so at this moment, we're looking for a retracement, which is possibly happening now. So let's mark out this fair value gap. We've got two fair value gaps here, but we mark out this one here. There's another one just above. But we're probably more interested in the one below. Because we have a few more confluences that add up. Obviously, have a bit more of a bigger retracement into the range. Also come into the support area where we initially came down, held, and sort of broke from. And then if we get some momentum and rejection in this area, we could possibly look for a long. Yeah. Possibly. So we're just going to watch the price action and just see what the market wants to do. And that's how we're going to base our possible entry for a trade. I'm still sort of bullish just based on the market structure, yeah? So I'm just watching the market. I don't need to be right, I'm just watching the market. I've got a thesis for long, I've got a thesis for short. But the thesis turned more long because of how the market's price action started printing. So not in a rush, just patient, just watch. If the setup fits the entry criteria for taking the trade, then take the trade. Obviously, when the market's trending, it's a simple criteria. Whatever way the market's trending, we're looking for retracements. You know, not just any retracement. You're looking for. I like to look for quite deep retracements. You know, we're looking for the market to hold whichever, the higher low or the lower. We're looking for the market to hold the lower high or the higher low, whichever, depending on which side of the market we're trading, if it's long or short. And we're looking for some momentum away from that area. I do repeat, this is just a video log, really and truly for myself, and also just to connect with the community. But this is mainly a video log, just to replay, watch back myself, how I do things in real time, how I'm thinking. Let me see how did that thinking play out in real time, really looking at it. That's the only reason I thought I'd do something different, you know? So we're not doing nothing, we're just watching. Just patience, really. Do like the market and see we're getting a rejection, starting to be, might possibly get rejection, but we'll see how it rejects. If it rejects with very big momentum, then we possibly might enter the trade. If not, we might wait for some type of liquidation event of the low before we get in, but we might not get that. It might be a go move. Let's see if we've got any inversions going on here. Let me quickly look. Let's look. Okay, we had 1 minute inversion, but we've got a few of them above. Let's check the 2 minute. You'll probably want to wait for a shakeout, some type of manipulation. 2 minutes a bit high as well. Yeah, the 2 minute. Let's wait. See if we get some type of liquidation. Might want to take out this here. Maybe come down into this one and then we might go long. Let's watch this area. We might get a liquidation event of this low. You might want to run all the way down, who knows? So as I said, we just watch price action. We're not predicting the market. We're watching the market, what it does, and reading price action. So I'm in no rush just to jump in the trade because it's going in direct or doing something, because it's doing something. This is patience, we're waiting. Okay, so at the moment, the market has broken these fair value gaps, but that fair value gap, it can literally retrace back into that from this point. All right, we've got a very wide range bar. Now, the only cause for entry here is the next bar came in and engulfed all the way back up into that fair value gap with momentum. That's showing momentum. We had a small liquidation. We've taken out a small amount of stops here. We might want to go lower and fully take that area out. Maybe not. Looks like we're going to keep running down. 15 minute is a pretty big bar now, though. That's a pretty bearish bar. That's a pretty bearish bar. That's what sometimes you got to zoom out. Look at that bar. We're coming all the way in back to these lows, it looks like. Yep. We're coming all the way into these lows. So, yeah, it's going to be a very deep retracement. Very, very deep retracement, which is good. All right, so we've liquidated these lows here. So I'm thinking we're going to come all the way in. We're coming all the way in. If we take out this low and reject heavily, we're going to probably grab a quick reversal trade, short-term reversal trade, okay? We just watch what the market does. That's all, just patience, and we watch what the market does. We know our setup, we know what we're looking for. We're just waiting for the market to give it to us. Like, there's nowhere for me to enter here because there's no, like, how do you anticipate this? Like, do you know what I mean? There's nothing telling you that, actually based in the market structure and everything, that, okay, yeah, obviously once it gets down here and it's going, yeah, okay, you might think, okay, now we're going to take out these lows. Okay, cool, we've got this down here that could frame, but there wasn't no real liquidity. There wasn't no resting liquidity that was really taken out anywhere. So, you know, the market's just doing what it does, so it's going to let it do what it does. But the frame from here, okay, we've taken out this liquidity, we've gone straight past it, right? And now we're coming down into these other points that have been points of interest that have been selected out. We're so low now, I would like to see the market keep pushing with momentum down, take out the low, and then we can, if we see a quick rejection, we can run it up, or we might reject here at this 1 minute fair value gap. As I say, all these different things are framing points for the market. These are possible entries, possible scenarios that we're watching, and then whatever scenario that the market picks up on that actually fits our criteria for taking the trade, that's the sort of thing we're looking for. Could this be one of them? Yes, it could, but the only thing is, I get a little bit apprehensive when we're so close to a low. See this 15-minute low, there's liquidity, it stops down here. There's people that got in, that bought in at this fair value gap, you know, for whatever reason, everyone saw this and they got in. So there's money behind this point here. There's something that can be liquidated. So when this is something that can be liquidated so close, I tend to be apprehensive. Even if the market just shoots up, I'll be apprehensive. Then if the market does that to me and I miss my initial entry to re-enter on the retracement, I'll let it go up a bit and possibly come back, create a new fair value gap, and I can enter on that on that internal retracement of where it stopped. It's, you know, you don't have to outthink the market or be in front of the market. And if you miss it, you miss it. If it comes back, it comes back. It's fine. But it needs to align clearly with your rules of engagement, which is your strategy for your entering the trade, you know. See, I would like these lows to get swept pretty quickly. Nearly an hour into the session, London session open. I'd like to see these lows just get taken out. Let's see if we get a rejection and move back up to the high, possibly. But as I said, we'll just watch and see what the market wants to do. It's a 2-minute fair value gap. If it inverts it, that's a possible entry. This one's already been run through. Let's see if this bar inverts this 2-minute fair value gap. This could be our entry, possibly. what you see. That's already gone past 6 bars. No, that ain't good enough, really. You see, the overall market is at a point of high resistance. So what's been happening in the market is slowly but surely showing us, and it's moving sideways. So we're starting to get that range bound, more range bound. We've been trending for a long time. Now we're starting to do a bit of the range bound trading, you know. And when we get into the range bound trading, the daily highs, anyway, we're looking for rejections, yeah, at key areas. We're looking for rejections at key areas at them times. Like, you know, the market, to me, the market does two things. It's either trending or it's range bound. Yeah, the market has two movements. It's either trending or it's range bound. And it has another angle to it. It can go up or down within that trend, within them trends, in many different ways. So that's the different mechanisms of the market, yeah? So we look at it like, so that's quite a powerful bar. We've actually closed on that 2 minute. I wonder if I should enter, look at it, it's going. Yeah, we closed this 2 minute fair value gap. Wait, what? 56. We've got 1 more minute on it. I'm still not fully trusting it, but it looks pretty good on the 2 minute. We've had this liquidation here already. But you know the market's greedy. You might want to just come down, take this out before it goes. But to be honest, let's just be patient and wait and watch. Excuse me. That's what I think is best. For us to be patient, wait and watch. Yeah, it actually closed as a really good 2 minute inversion. 1, 2, 3, 4, 5, 6, 7. A little bit more bars than we'd like. What do I think? Where am I stopping? Let's see if it comes back into this 1 minute fair value gap and rejects. If it does, then you can possibly take entry. So we keep an eye on it. Setup looks pretty good. Let's just see and make sure. Don't want to be just getting in and getting stopped out for no reason. Looking bullish. At the moment, it's looking bullish till it's not. Like literally, something can look bullish, and the bar, and then that 1 minute can totally change, and it can look bearish. Like literally. So we see if it taps into this 1 minute fair value gap, and if it rejects, just a little, we get a little bit more structure. Give us somewhere better to put a stop loss. My stop loss is only five pips, so that's why I have to wait for these retracements and things. You know, otherwise my stop loss sometimes is in the middle of no man's land. And the trade is not going nowhere. Remember, yeah, this range, 126.78 is the top of the range. So even if it goes away now, it's still gonna have to still pop. Well, it don't have to do nothing, but possibly before it gets to this high, it's gonna take out this high, show us more conviction, come back possibly again, and in the time that time it comes back, we'll definitely get an entry long. If that's the case, you know, if it doesn't do what the things that we're framing now, you know, so we don't need to chase the market. Just wait. That's it. Just wait. If it does it, then we're in. If it don't, then we're not. If it goes, it's gone. But we're not going to be chasing the market. We're going to frame our entries and when we get in to the market, you know? So it's a constant game of patience. Yes, baby. just going to set up for longs, definitely. See what this 15-minute value gap here. Which could be inverting. We possibly could be getting long here, yeah? What we're looking at is we've got this 15-minute bearish fair value gap created, yeah? Now, if this inverts, then it could pose a long entry. Obviously, we've been watching how the market's been reacting here already. So we know that it's already been framing for the longs, yeah? So a close above that will signify long, but if it rejects, it could come back down to these lows, yeah? So that's also, it's a caution, it's like a signal. It's a signal of caution or a signal of possibly looking for an entry to press the button. We also got the bullish fair value gap, 1 minute fair value gap here, which aligns with the 15-minute fair value gap. We just need to see if the market's going to close above it. If it comes down and then closes above it, that's going to give us a bit of structure to enter on. You know, for a 5 pip stop loss for the market to keep running up, possibly. But if we get a strong close, then now at least that's framing why we possibly could be taking a long entry, you know. We're already sort of bullish to this high, but we're looking for waiting for the market to get there, especially around this 50% area. You don't be taking trades around here of anything. Yeah, this is like 50%. It's 50% of this range. Here's the high, here's the low, here's roughly around 50%. Who wants to take a trade there? Not me. I used to and get burnt because you think you know where the market's going, but you don't. So for me, when the market's around that 50% range, I just see it as all, everything I see is like a fake house until it gets to till it gets to either of the extremities of that range, then I'm looking, then the probabilities are more in the favor of, if it's way down in the shorts and it's possibly could reject, then I can possibly frame how I could go long. If it's at the highs of the range and it rejects, then I can possibly frame why I'm going short, you know, with more probability than being in the middle of the range, not knowing what the market wants to do, you know, unless, see, it didn't really close on the 15-minute above, but it's rejecting off this 1 minute fair value gap here. Do you trust it? Let me check the 5 minute. 5 minute nearly closed. I want to be in it, long in it, but I just don't see anything happening that is telling me to get in long at the moment. Four hours bullish, 1 hour's bullish, 15 minutes bullish. I think we should go long. As a breakout design and close, it's going to take a long and see how it goes. And that's going to be a winners or draw. We're going for it. When's up? Bar close, bar close. We broke out that zone. Do I trust it? It's just a good setup. It's just a good setup. Okay, we can see it in the 15 minutes. See it in the 15 minutes. That is the first time for entry. I think so. All right, I'm going to take an entry on. I'm waiting. See if this pulls back a little. No, it's going to go. Come on, give me 1 sec. Pull back. Let's go. We'll get a little retracement. So I haven't ended yet. Getting ready to end. Just watching price. Just make sure I'm not going to get faked out. There's no real momentum as well. Hasn't really taken off, no wide ranging bar. But we have come up this tiny block here. I like confirmation. Even if I get extra 1 or 2 pips later, you have patience with the market. Even when you think it's go time, sometimes it's still patience time. Something not aligning. Like with experience, you start to see sometimes you think it's a go and then something doesn't align at that time. You just have patience. Okay, we're getting long. Let's go for it. Winners will draw 5 pips. Yeah, close above that. Let's go. We'll give it a go. We're giving it a shot right now. Entry's a piece of rubbish. Entry could have been a little bit better, a little bit high. Now it's 15 pips. Why is this? As soon as I get in the market, comes straight in, as it does. Could be wrong timing, but the market's going to carry on trending upwards. I could be wrong. If I'm wrong, it's taking 1 trade and done. Log out and we'll call it a day. It actually looks pretty weak, to be honest. Actually looks pretty weak. Instead of the sort of strength I thought I might start seeing after the pullback into the 9 EMA, it's pretty weak, to be honest. Here's what it is. Let's go. Let me get on to where I take my trades. So, yeah, entry could have been a little bit better. Obviously, I'm trading Great British Pound USD on CFD, so the spread as well gets you a bit. So that's why my entry wasn't as good as I wanted it to be. Let me get a picture of this. A screenshot. Another screenshot here. Yeah, it doesn't really look that good at the moment. See, the market's still just holding on here in this block, this little, in this part of resistance here. Doesn't look very strong. Yeah, so it's breaking. It's trying to break the 90 in May. So we might take a, at the moment, look like we might take an L. Market ain't really look like it looks like it wants to roll over. It might just be sort of taking its time to sort of push and trend upwards, but how it looks, and I would like to have gotten a slightly better entry, a couple of pips, but I'll cut myself in a bit. But to be honest, if it comes back from here, it's going to come. It's going to take out this whole thing here anyway, which is going to do. Yeah, it's going to retrace. This is like a pulling. Yeah. So that's it. Taking this trade at the high in the mid range, not a great trade. So I even got sucked in the end, thinking it's going to go and the timing was wrong. So we take our L and we're going to shut this down as soon as we take the L. So not the best trade. Came up. We haven't really shown no momentum. I'm at sort of like still at sort of like a premium of this range. But I was looking at the 15 and the 5 sort of structure. Just closed above this fair value gap here on the 5. Okay, I thought, okay, maybe the market will just want to sort of keep trending upwards, which I could be right, but where my actual entry is could have been just a little bit better. That's all. So, look like we're about to take this L on the chin. Then get ready to take a screenshot of the L on the chin. Stopped out. It doesn't feel good when you wait to take an entry and then you sort of take an entry that ain't the best. So, this is what it is. It was at the high of this internal range, so it was just a choice I made. I didn't have to make it, and I did. So I'm going to take it on the chin. I'm just getting ready to take a photograph of this losing trade, and that would be the only trade on this. It's 9:30. I only take one trade on this USD a day. Yeah, stopped out. Not happy, but I'll take it on the chin. Bloody annoying. Headache. Pissed off. Alright, I'm logging out. Yeah, trade wasn't the best, man. I took the trade at the high, man. I'm looking at 5 minute and 15, but 1 minute didn't really align. Yeah, I'm not happy with that trade. So in the end, I just saw after. I should have just got out, but I was ready in it. I was ready. I did think I should have got out when it got to like here. I was like, it's not really moving the way I thought it would. Just sort of broke out, and it just came back in. I was like, man. So unhappy, not happy with that trade. So it's gonna log out, take it on the chin.